Hello, this is James Robinson, and this is the fourth installment of the Extrinsic Value blog. Today we're going to talk about our performance for the month of February. I wish we had better things to report, but February is a pretty negative month both for the market and for our fund. In terms of absolute performance, I was down 5.1% for the month. This takes my total performance for the year since January 1 down about 3.7%. Equates to a compounded annualized rate of return of negative 22.2%. And of course, my goal is to have positive 20% return, so I'm kind of going the wrong way. But it's early in the year, and obviously February was a very bad month for the market. As of today, I'm about 85% invested in cash. 15% in cash, 85% invested in stocks. In terms of performance against the benchmark, the S&P 500 was down 3.9% for the month, so marginally different than mine. And for the year, it's up about 0.6%, so slightly less than 1% up for the year. So we're trailing the market, but only marginally. Position reports. So it was also at best mediocre in terms of how we did with our positions. We had one stock this month which converted from one of my active portfolio to a long-term hold. And to recap, I try and own 15 stocks in what I call my active portfolio. When any of those stocks goes up 15% above its purchase price, I sell my original holding and I transfer the profits to the active and long-term hold portfolio. And again, we had one stock do that this month, which was Wabash National Corporation. WNC is its trading. We had held it for 115 days by the time it was up, and when we sold it, we had a return of 16.2%. So pretty good on that particular stock. To be clear, that it wasn't up 15% for the month. It was up 15% in the 115 days that we owned it. It was just that this month it crossed that threshold. And my holdings in this Wabash National have now shrunk down from 1/15 of my funds down to about 0.6% of my funds. As a result of selling out of that, I had an opening in my portfolio. I had 14 stocks, so I bought one more, which was RGR, Sturm Ruger and Company, the firearms manufacturer. Probably not the right time to buy a firearm manufacturer right before all of the issues with the school shootings, but it remains a solid company, and I think in the long run, gun sales will recover and the company will do very, very well for us. My cash report, over the course of the month, I added cash to my portfolio in the form of additional investments. I deposited the equivalent of about 5% of the fund in additional funds, and those funds were used to buy additional what I call shares at today's book value, so that they didn't fluctuate the value of the shares in the way we're tracking these stocks. I only had 5 stocks pay a dividend in the month, and the amount was negligible in terms of cash on hand. It was less than it was about 1/10 of 1%, 1.6% of new funds from dividends. We didn't invest any new deposits into the market, so it just increased our cash position by 5%. By 47%. So we went from about 10% cash to about 15% cash. And again, my goal in the long run is to be virtually 100% invested in the stocks. But I want to stress, I don't really consider what I do is to buy and sell stocks. What I think I do is I research stocks. And through the act of researching stocks, I find good companies, and that the buying and selling of stocks takes care of itself. It's really a byproduct. So my goal is to analyze 3 stocks per day, and while that may seem like a lot, it's really not very much, because about 80% of the companies I look at have so little appeal that I spend very, very, very little time on them, focusing on the 20% that actually seem like they're solid companies. So in February, I managed to analyze 86 companies, about 3.07 companies per day, which again, I managed to meet my goal. Of those 86 companies, I found 11 of them were solid enough companies that if the price was right, I would buy them. And so about 13% of the companies I looked at this month met my criteria. And of those 11 companies, 2 of them were also not only solid, but they were cheap enough that I'd be interested in buying them if I had the funds available. Right now I'm fully invested, but I have sort of added 2 more companies that I would consider buying if and when I get new cash. So my research totals, I've been actively working this portfolio for 26 weeks. As of the end of February, to date, I have analyzed 584 companies. I was out to 3.2 stocks per day. 109 of those companies were solid, so about 18.6% of the stocks are solid companies. Of those 109 companies, 30% are cheap enough to consider buying at today's prices. Though to be completely fair, it's March 3rd, and this is after a big correction. I wouldn't normally expect that large a number of my companies to be cheap enough to consider buying. So in any case, 5.1% of the companies that I look at are both attractive in terms of fundamentals and in terms of price. So in summary, for the month, for the stock investment is down about 5.1% for the month. The company, one company passed the 15% appreciation threshold and became a long-term investment. To be clear, my goal is to sort of have 2 to 3 companies do that every month. I have one new company added, which gives me 15 stocks on the active fund. Cash on hand increased from about 11% of assets to 15%. I researched 86 new companies, found 11 solid firms to track, and found 2 stocks cheap enough to warrant further research and consider buying. And I want to stress that while February was a rough month, I don't think there's anything permanent. I don't think we're doing anything wrong. I think there was a bit of a correction in the marketplace, and we're comfortable owning the companies we own. And we'll see how things go in the month of March. Thank you very much.